Yo, what is up, y'all boys? I did not enter a trade today. Sadly, the trade that we would have entered would have been a lose or it would have been break even, but I'm gonna go over real quick what my thought process was this morning. So essentially, we marked out our draws and liquidity. These are 4-hour draws and liquidity. And so essentially, let me mark out my market open real quick. Yeah, sorry for no trade recap today. Or sorry, not trade recap, pre-market buys. Uh, so right here. 9:30. So this is our market open. And so if we go to the 1 hour, I mean we're just basically trying to see, what price wants to do for the day. So if we're on the 1 hour, we're up here and we're like, all right, what do we think is gonna happen, right? And so at about 7 a.m. we reach this high right here. Then we form this candle to the downside, starting 8 a.m., finishing closing at 9 a.m. So now we see like, all right, we might go down. So this is an 8 a.m. candle. We close at 9 a.m. below this low. So at this point, I'm thinking we are probably gonna be bearish for the day simply based on the fact that I'm thinking that this blue movement upwards was probably a retracement and we're gonna continue on this downtrend that we see right here in the market. However, we have one more restricting factor on the 4 hour, and that is a fact that we had not yet turned bearish. So we had these lows down here. Once we finish closing below these lows right here, it is confirmed that we are now bullish on 4 hour, 1 hour, which are the two time frames I'm mainly concerned about. And so we end up forming this huge imbalance in the market, and we do not come up here to this BPR or any of that stuff, and we end up closing below this actually also, which is an invert. This is a fair value gap. We end up closing below it, which causes an inverse fair value gap. So from this point, I'm thinking we are super bearish. So we have these lows right here that I'm hoping get swept. So let's mark this out real quick. So we have these lows. Let's scale down right here. So we have these lows. Essentially, nothing happens. No liquidity. We don't see a reaction. Liquidity sweep, whatever. And so we end up coming even further down. And this is where around the time that I'm like, all right, I might end up taking a trade. A bunch of this is pre-market. We end up coming down here, end up coming lower, and we end up sweeping this strong liquidity. We see buying pressure, but our retracement comes below this right here. So this is no longer a valid retracement. So we end up coming down here, sweeping this strong liquidity, end up getting huge buying pressure. We end up getting a retracement. And all of this right here, we are waiting for a 1 minute break of structure, which we get. So now we're looking for a 1 minute break of structure, 11:15. So 11:15, we're looking for a break of structure to the upside. So we have these highs, this high, this high. So I think we end up, oh no, this high. So we actually end up breaking structure right here off of right here. So we can enter right here. And I was first take profit would have been off of these, which we would have been hit very quickly. And then second take profit would have been right below the equilibrium of this 1 hour fair value gap. Or sorry, hold up. AB was off a 15-minute fair value gap. Hold up. Wait, hold up. Had I known this, I probably would have taken profit. We had this 15-minute fair value. I guess I was looking at a different, possibly the 1 hour. Might have been looking at the 1 hour equilibrium of this. Let me check my phone real quick to see what I was thinking. But now that we're looking at the 15-minute, if I were to have take profit off of that, that would have been successful. But obviously, like I said, I did not enter a trade. I wasn't really looking into it too much. So we were looking at, sorry, this was a five. I was looking at the 5 minute. 5 minute. So I guess this is what I was looking at. I guess all in all, I mean, now looking at this, or hold up, wait, this is our fair value gap right here. All right, this is what I was looking at. 5 minute fair value gap right here, and look, and our equilibrium is right here. We do not end up reaching this equilibrium, and then we move our stop loss or to break even, and then that ends up happening. But if we were to look at the 15 minute, it's actually very interesting. We have this imbalance right here. If we were to have put our take profit below this, that might have been a better thing to do. So I guess that would have been a mistake we would have made. This would have been a much better trade. Taking it off of the 15-minute fair value gap instead of a 5 minute fair value gap. So yeah, boys, that's basically it for me. Takeaways is mark up your high time frame draws and liquidity, which were 4 hour draws and liquidity. Wait until we see some sort of valid buying pressure, followed by a 5 minute, 10 minute retracement. If our retracement is like this, where it ends up coming like below right here, or two, if our retracement is not like halfway, I guess it's not a valid retracement. We want a retracement that's like, sort of like this. So we end up marking out our equilibrium. We end up seeing price come down its equilibrium. We don't see price close below this right here. So if it were to close below this, it would be again invalidated. But since it was more of like an equilibrium retracement, that's what I'm willing to take it off of. So, and then we just mark up our confluences, retracement confluences, so our fair value gaps, and that's where we end up taking profit, stop losses below these lows. So that's basically it for me, boys. I'll see you boys in the next.